There is a daily candle pattern that nobody is talking about, and it's so simple, a little could trade it. This strategy tells me when to trade, what direction to trade, and exactly where to enter, stop, and exit, all by showing up to the chart for less than an hour per day. I've been using this strategy throughout all of December, and I'm already up over $10,000 in payouts. I even had a single trade where I made $6,000 in like less than 30 minutes and with almost zero drawdown. By the end of this video, you have the same exact mechanical rules, so you can apply this to your own trading. Now, before I tell you about the mechanical steps to the strategy, I need you guys to understand the two conditions the market can be in. So the first condition is chop, where we're moving pretty much sideways and consolidating. You'll notice that we have this low, or kind of like a support level, and every time it hits, it bounces off of it. So anytime we hit those lows, you want to look for longs. And right, we also have these highs that every time they get taken, they reject off of them. So you look for shorts. So a good rule to follow is that when we're in a choppy market, you simply long the bottoms, and anytime at the tops, you just simply short the top. Long the bottom, short the top. Now, the second condition the market can be in is a trending state. In a trending state, trading is very easy. All you have to do is enter in long on any sort of pullback. So we can see in this example, we're in an uptrend. So as soon as we get that pullback, we can enter in a long, pullback, long, or if you want to enter on that break, you can look for longs as well. The main point is that if you have the correct direction of the trend, wherever you enter, whether it's on a pullback or on a break, most of the time you're going to win. So let's get into the actual strategy. So this is called the 1 hour strategy, and it works on either futures or Forex. I like to trade it on ES, the S&P 500. And usually I'm done for 10 a.m. So less than 15 minutes, which is great because then I can get my money and go about my day. Quick interruption. If you guys want the free PDF I made for this video, I'll leave a link in the description where you can get that. So the first step of the strategy, you actually want to go to the daily time frame at 9:30 a.m. and go ahead and mark out the previous daily high and previous daily low. So to do that, all you have to do is look at the previous daily candle and mark out the top wick, and this will be our previous daily high. Make sure we extend that level to today so we can see it, and then go to the bottom wick of that previous daily candle and mark that as our previous daily low. And I like to customize the color for red as the low and green as the previous day high. Once we have those two levels marked, the next step is to go ahead and drop down to the 1 minute or 5 minute time frame. I personally prefer the 1 minute time frame for actually entering into trades, and then wait for 9:45 a.m. And the reason why we do that is because we want the 15-minute candle to close. And when that candle closes, we actually get something called our open range breakout, or orb, high and low levels, which are very important for our strategy. To get our orb levels, all we have to do is go to the 15-minute time frame and go ahead and mark that 15-minute high and our 15-minute low, which we'll call the orb low. Once we have that done, now we're ready to begin trading. The first setup is the trending market. So basically, after 9:45, after the orb high and orb low is formed, price is going to break out one of these levels. So let's say, for example, we break out of the orb high and we have a candle, a strong candle with displacement, which essentially means we have a big candle that essentially disrespects the level and completely pushes through. This is telling us that we want to break up outside of this range and continue moving up, and therefore trending upwards for the day. So if we break the orb high, then we're going to be wanting to look for longs only. Now that we've determined that it's longs and we're going to be trending upwards, you're going to want to enter in one of these three conditions. So either one, in this case, a bullish fair value gap in that same direction, or a new 1 minute candle, which is what I personally like. The third one is a pullback, where, right, if we start moving down a little bit, we know the trend is up, then you can enter in onto a long. Now, in terms of our stop loss, for me, I like to have a fixed stop every single time. So if you're trading a different instrument like NQ or gold, you'll want to adjust accordingly. But since I trade the S&P 500 futures, I use a fixed 4-point stop every single time. This is great because it reduces stress and it's easier on you psychologically, and you know the max amount you're going to lose per trade. So now that we enter into a long with our 4-point stop, so where are we actually going to put our take profit? So there's really 3 ways to trade this, and it all depends on your style. For most of you that are starting to use this strategy, I recommend the first one, which is trading with a 1-to-1 risk to reward. So if we have a stop of 4 points, then our take profit simply would just be 4 points. The second is a 2-to-1 risk to reward, which will make you more money than a 1-to-1 risk to reward, but does have a slightly lower win rate. And finally, having take profit at a key level. And in this case, this actually makes you the most money, but has the lowest win rate. Now, where would our key level be? In this case, it would be that previous daily high that we marked out. So we're going to have this key level that we drew out from the previous daily candle, and we can simply just target that high, and we'll just hold until market pushes up and takes it out, and then it'll take profit for us. Now let's look at the other case where it's actually a bearish trend. So in this case, we will push down and push under the orb low with displacement. So we get a strong bearish candle just like this. And same thing, right? We can enter off one of those 3 entries, either a bearish fair value gap, a new 1-minute candle, or a pullback. And the stop and take profit is pretty much exactly the same. So we can trade with a 1-to-1 risk to reward or a 2-to-1 risk to reward. Or if we want to hold all the way to our key level, now all we have to do is grab our previous daily low. And we can simply put our take profit at it, and that will give us the most amount of money. Now, one thing to note is that even though if we break out one of these ranges, we're not always going to have a previous daily low or previous daily high if it's a breakout to the upside. In that situation, you want to look left of the chart. And I recommend doing this on either the 15-minute or the 1-hour chart. And you want to look for previous lows. So if you see, for example, a previous hourly low, right, it's going to be a very obvious wick. You can mark that out. You can target that as your key level. Or for bullish and we're trending up, then you can just simply look for on the 1 hour an hourly high and target that as your level, since price is attracted to these highs and lows. Now let's look at the second trade setup, which is when the orb levels are actually ranging. So in this case, right, if we can see we hit the orb high and then dump off of it and then hit orb low and start ranging just like that, then next time we actually hit the level, we can wait for displacement or a reaction off that orb high. In this case, it would be a bearish reaction. And if we get that bearish reaction, we can simply enter in our short, right? Because when we're chopping, we long the bottom and we short the top. In this case, we're at the top. So all we do is enter in short. And again, we can have a 1-to-1 risk to reward. In choppy conditions, I recommend having that lower risk to reward. You can go for a 2-to-1 or even target the orb low if you'd like and let your trade play out. And if it was the other situation where if we know we're chopping in between these 2 levels, then, right, you just long the bottom. So you can go ahead and enter in long off that bottom. You can wait for displacement if you like when we're raging. 4-point stop. You can either have a 1-to-1 risk to reward, 2-to-1, or target that orb high. And it's really that simple. So now I'm going to show you guys some trade setups on the actual charts so you can get used to it. So let's start off with this first example here. Now coming into the market at 9:46, we can see we form our orb low level and our orb high level marked by the green and red lines. And we can see our daily candle is already in the downtrend. Now we want to look for our previous daily highs and lows. So I have an indicator that marks out my orb levels and my previous day high and lows all automatically, so I don't have to keep marking it over and over every single day, which saves me a lot of time. If you guys want free access to that, I'll leave a link in the description of this video. But anyways, we can see the previous day, which was Thursday, we can see the high is drawn from over here. And for the previous day low, we can see it was actually this wick down here. So if we draw that out, that's our previous day low. But I already have the indicator doing everything for me, so I don't have to draw that out. Now coming into the actual day, we just want to see what happens when the market hits one of these levels and how it reacts. So we can see here at around 9:48, we have a tap of that orb low, but we didn't get a very strong displacement. So I kind of want to wait and see if we can get a stronger break of the lows. And now I like how this candle looks. See how it's very strong. It's indicating that we want to continue downwards and continue trending. So now let's try and take a short off of it. So we're going to have us enter at the new 1 minute candle. You can enter off the fair value gap, new 1 minute candle, or a pullback. And you can do a 1-to-1 risk to reward or 2-to-1, or on what I did this day was actually go for the previous day low, which is over like 16 RR, which is crazy, but it was very volatile, so that's why I did it. Now we can see, right, we got a pullback, and now market continues to run. We're already up maybe like 3R. And boom. On this day, if you'd held, you would have made over $3,000 on a single contract. And we can see how we trended down throughout this hour and took out that previous day low. I want you guys to also notice how when we're trending downwards after we've broken that orb low, we can see it's not just the orb low break that has an entry. We can see along this downtrend to that previous daily low, we have many more entries we can get into, whether it be fair value gaps or pullbacks or new 1 minute candles. There's just so many opportunities to enter right up until we hit that previous daily low. And you know, once it actually does get hit, I mean, the rest of the day kind of just chops around and has low volume. If you have any questions, leave them in the comment section below and I will answer every single one. And if you guys are interested in my free full breakdown 8-page PDF of my strategy, then I'll leave a link in the description or you can find it there. And I'll see you guys next time.